Have you ever wondered why the US stock market, the supposed engine of American capitalism, sometimes seemingly wets the bed at around 3 a.m. on a Tuesday for absolutely no reason? No news, no earnings, Powell didn't sneeze, but suddenly the S&P 500 is down 2%, and crypto, obviously, concomitantly, is down 10%. You look at the news and they say something vague like global liquidity concerns. Absolute hogwash. Bollocks, pardon my French. I'll tell you what happened. A politician in Tokyo, probably, named Sanae Takaichi, probably butchered that name, just gave a speech about some interest rates. Welcome to the yen carry trade. You've probably heard about it before, but today we're going to break it down into the nitty and gritty. My name is Justin Bantam. This is the House of Trade. Please do like, share, subscribe, and carry this trade and this video further afield. This carry trade, so what is it? Well, it's the financial equivalent of the infinite monetary glitch in a video game or something like that. It is the plumbing that connects the bored Japanese housewife to the steroid-addled hedge fund manager in Connecticut. It's the reason why your 401k is securely and secretly addicted to Japanese esoteric and obscure monetary policy. So let's take a little brief history lesson. So the last maybe 1 or 2 decades, what's been happening? Wall Street has been printing money ad nauseum. We all know that, right? They found a seeming ostensible cheat code, but every cheat code has a penalty. We all know that. And when this one breaks, and it will break, have no doubt about it, it won't just be a correction. It will be a margin call on the entire monetary planet. Today, we're going to expose that machinery. We're going to meet the degens who leverage this trade up. We're going to look at the math that terrifies central bankers, and we're going to find out where the next Great Depression might actually be made in Japan. So put on your helmets. We're going to Tokyo. And if you've never been, it's very beautiful, especially in the cherry blossom season, unbearable and interminable in the summer. But I digress. To understand what the carry trade actually is, we need a villain. Let's call our villain, I don't know, what's the villainous name? Let's call him Julian. Julian runs long-term capital destruction partners out of Greenwich. Julian thinks he's a genius. Why wouldn't he, right? He drives a Porsche. But Julian's entire strategy is actually dumber than a bag of hammers. Here is Julian's problem. He wants to buy Nvidia. Of course he does. Julian is tracking the market, right? He wants to buy Apple. Another one. Of course he does. He wants to buy Bitcoin. But Julian doesn't want to use his own money. Julian never does, right? That's for peasants. That's for simpletons. That's for the plebs. He wants to borrow that money. If he goes to a US bank, they tell him, sure, Julian, no problem. The Fed funds rate is, 5.5%? So you're going to pay us 5.5% interest and you can have the cash. No problem. Julian is disgusted. Me, a hedge fund manager of my ilk and blue blood, 5.5%? Who do you think I am? That eats into my bonus that I haven't earned. That's very expensive. So Julian looks east. He looks to the land of the rising sun. If you don't know what I'm talking about, that is Japan. Now, Japan is a strange place. They have an aging population, demographics going off the cliff. They don't really buy anything, and for like 30 years, their economy has been in a veritable coma. To keep the patient alive, the Bank of Japan set their interest rate near zero, like forever, sometimes even negative. I know, mind-blowing, right? They are basically begging people to take money. So Julian connects all of this together. Obviously, he's smart and he's got a Rolex. And he has an epiphany. Step 1. Julian calls the bank in Tokyo. Step 2, he borrows 10 billion yen. Step 3, the interest rate on this loan is only 0.1%. It's literally like free money. And step 4, he sells the yen, buys US dollars, and buys Nvidia stock. This is what we call the interest rate differential. Even if the Nvidia stock stays flat, doesn't move an inch, Julian wins. But why? Because he owns an asset yielding 5% and his debt cost him nothing. He pockets the 5% difference for just waking up in the morning. But Julian obviously isn't happy with 5%. Julian is a DJ. He leverages it 10 to 1. Now he's making 50% returns on money he doesn't own. And the yen, what does it do? It goes away and rots in the corner. It's the perfect crime. Until the police show up, you need to understand the actual scale of this. This isn't just Julian, it's everyone. It's the Mrs. Watanabe, it's the retail traders in Japan selling their own currency to buy US bonds, it's the massive macro funds, it's the algorithms. Trillions, yes, with a T, of dollars have flowed out of Japan into tech stocks. Think about that. You think Nvidia went up because of AI? Sure, maybe, that's part of it. But how much of that pump was just borrowed yen looking for a home? The US stock market has effectively become a derivative of the Japanese yen. And here is the conspiratorial part. The US government actually loves this. They need people to buy their debt. Who buys the debt? The carry traders. So for years and years and years, the central banks played that game. The US will raise their rates to fight inflation, right? Japan keeps their rates at zero to stimulate growth. The gap gets ever wider and the trade gets more profitable. And the bubble gets bigger. It's a symbolic parasite of sorts. The US gets that liquidity. Julian gets his new boat. Japan gets a destroyed currency. The yen got so weak, it looked like a crypto scam coin, right? It lost 30% of its value. Japanese people stopped being able to afford iPhones. But Julian doesn't care. The weaker the yen got, the easier it was for him to pay back his loan. He borrowed yen when it was expensive, and he pays it back when it's worthless. He wins on the stock, he wins on the currency. He's a genius. But for some, it's a widowmaker trade. And what does that mean? It means that anyone who bets against it ends up dying. But trees don't really grow to the sky. And eventually, Japan gets tired of being the world's ATM. So that's where we enter with our wild card, Sanae Takaichi. She is a heavyweight in Japanese politics. Yes, she ran for prime minister. She is hawkish. She's an uber nationalist. And most importantly, she hates interest rate hikes. Or does she? The market is terrified of Japanese politics right now because the Bank of Japan is finally waking up. Inflation has hit in Japan, their people are getting angry, and the Abenomics experiment of infinite money printing is failing. So here is the nightmare scenario for people like Julian, right? It's the scenario that Jamie Dimon wakes up in the morning in a cold sweat. What happens if the Bank of Japan keeps raising rates to defend the yen? Just a little bit. Just a tiny little baby rise, like 0.25%, 0.5%. What happens if at the same time the United States Federal Reserve cuts rates? Well, the interest rate differential, the gap, closes. Suddenly the yen starts to strengthen. It goes up in value. Remember Julian's loan? The one that he borrowed 10 billion yen of? When the yen goes up against the dollar, Julian's debt gets bigger and bigger in dollar terms. So let's say the yen spikes 10% in a week because Takaichi or Ishiba or whoever is in charge decides to support the currency. Well, Julian, we know he's leveraged to the eyeballs. That 10% moves, wipes out all of his equity, number one. His risk manager calls him screaming, hey, close the trade, close the trade. Now watch how the mechanics unwind. This is a pure deleveraging event, right? To pay back his yen loan, Julian has to sell Nvidia stocks, which means US stocks might crash, buy yen, which means the yen spikes higher, right? So do you see this infinite loop of cataclysm? Julian selling Nvidia to buy the yen makes the yen go up more and more, which bankrupts Julian's friend, Chad, who also has to carry trade. So Chad has to sell his Bitcoin to buy yen, which makes the yen go up more. It's a liquidation cascade. It doesn't really matter if Nvidia reported record earnings. It doesn't matter if AI is the future of humanity. The stock must be sold because the loan has been called. And this isn't like fantastical revisionism. This actually happened in August in 2024, if you remember. The Bank of Japan raised rates by a measly 25 basis points. The Nikkei fell 12% in one day. The worst drop since 1987. US stocks melted. Crypto fell 20% in hours. Why? Because the infinite money glitch got patched. The dust eventually settled, of course. The central bankers, they panicked like they always do, and they promised to play nice. The market bounced back. Julian bought a new vest or Patagonia or something like that. But here's the terrifying truth. The trade isn't gone. It's just lurking somewhere else. It's still hiding. There are still trillions and trillions of dollars of carry trade out there, lurking in the shadows. And Japan can't keep rates at zero forever. Takaichi's policies, or whoever takes up the throne, will eventually have to deal with the reality that their currency is dying. Eventually, the Bank of Japan will have to normalize, and they'll have to raise rates to an ungodly 1%, or maybe even 2%. When that happens, the giant sucking sounds you hear will be the liquidity leaving the US stock market and going home back to Tokyo. So the next time you see the market crash for no reason whatsoever, don't look at the Fed. Don't look at Jerome Powell. Don't look at earnings. Look at the dollar-yen chart. Look at what Takaichi is saying. Look at how the spread is widening out. Because, boys and girls, tradettes and traders, the invisible hand of the market is holding a samurai sword currently, and it's hovering right over your portfolio. It's bigger than the sword of Damocles. This is the biggest carry trade. It works beautifully until it doesn't. And when it doesn't, everyone gets carried away in one big yen-colored body bag. I'm going to convert my cash into gold bars and bury them in the backyard, and I wish you good luck for everyone else. But for now, farewell and adieu. My name's Justin Banton. This is the House of Trade. Like, share, subscribe, and be vigilant of the carry trade, because it's a widowmaker. Ciao for now.